Big day today. Bank of Canada just announced a 0.25% interest rate cut today, which I'm sure if you follow any mortgage brokers or realtors on social media, I'm sure you've seen a lot of shares and postings about. And at the same time, Toronto Real Estate Board just released its stats for the month of May. So as usual, I got tons of calls from my clients and friends asking me what this means for the Toronto real estate and the real estate in surrounding areas. I mean, do I buy a house this year? Do I sell mine? When should I sell mine? What do I do? And if you're watching this, you're probably somewhat interested in the same thing. And if you're watching this, you're probably wondering the same thing. What is the market like now, and how did the numbers look in May? And how does this 0.25% rate cut affect you as a home buyer or a potential seller? And lastly, how does this rate cut affect you as a buyer or a potential investor who's looking to get into his first home or invest in his first property? Hello everyone, my name is Durham. I'm a real estate broker here in the Durham region. So I service the Pickering, Ajax, Whitby, Oshawas, and Claringtons, and I make educational content about the Toronto real estate market. If you're watching this, all I ask from you is a like and a subscribe, and I promise you, I will not let you down. So with that said, let's get started. Let's start with interest rates. Well, Bank of Canada finally did it. They did it. They just cut the rates for the first time in 4 years. But 0.25% is not a big number. And this is how it can affect you. If you are a homeowner and you are on a adjustable variable rate mortgage, your monthly mortgage payment will be lower. Now, if you have a mortgage and it's not an adjustable variable rate, but rather a traditional variable rate mortgage, then your payments will stay the same, but more of your payments will go towards principal and less of that will go towards interest. Now keep in mind, this change does not affect fixed mortgage rates because fixed mortgage rates are tied to bond yields, not the overnight lending rate. However, I do believe those bond yields will come down in the coming months, but that's a different conversation for a different day. So does this mean the home prices will now go through the roof? Simple answer is no. You see, 0.25% interest rate cut isn't going to change the market overnight because the rates are still fairly high compared to what prices are at these days, and affordability is still very, very low. But this is the starting point. So we can expect rates to come down further, and typically when rates come down, real estate prices rise. And Bank of Canada said they will not be doing rapid rate cuts because that will be counterproductive for everything that they've been doing for the last 2 years to finally bring down inflation to where it's at today. Because if rate cuts happen too quickly, then we're back to square one. I mean, people will borrow too much, people will spend too much, and inflation will come right back up. Which brings me to my next big topic, the real estate market. So let's look at this chart together, shall we? I want to start off by number of sales. It's bad. I mean, we're down almost 22% compared to May of 2023. While at the same time, new listings went up by 21%. What's alarming is the number of active listings. They're up 83% from May of 2023. So currently, if you look at MLS, there are just shy of 22,000 homes for sale in the entire GTA. And if you compare that to May of last year, that number was less than 12,000. So we know the active listings are way up, right? There's almost double the inventory now compared to a year ago. Number of sales are down, and for that reason, it's taking longer to sell a home. But what about the prices? You see, average price of a home for the month of May was $1,165,000, which is down about $30,000 from the same time last year, or 2.5% if you want to get really precise. What's interesting to me, and this is my personal opinion, is that this drop in average prices is actually pretty insignificant considering how much the inventory has gone up. I mean, think about it. We have now doubled the amount of homes for sale, and sales have slowed, and prices only dropped 2.5%. If you look at the numbers on month-over-month basis, prices are up. I mean, compared to April, we're up only like 1% or less than 1%, but the prices are still trending up. But if you compare the average prices of May of this year to January of this year, average prices are up $140,000. That's $140,000 over the span of 5 months. Now, all these figures I just talked about, right? Average prices is the average of everything in the GTA. So the condos, towns, condo towns, semis, detaches, and all over GTA, like City of Toronto, Durham region, Halton, Peel, York. So to break these numbers further, we have to look at the next chart. Just for context, when you see 905, 905 is everything and anything outside of the City of Toronto. And 416 is the City of Toronto. If you notice, all home types saw a significant decrease in sales activity. Keep in mind, this is comparing year over year. So we're comparing May of this year to May of 2023. And average prices in all asset classes saw a decrease as well, with exception to the semi-detaches in Toronto. And the majority of this downward pressure on prices and sales activity came from the 905s and the condo market in Toronto. In other words, the City of Toronto is doing fine. With the exception to the condo market, the freehold segment in the City of Toronto is doing fantastic. I mean, prices are doing pretty good, sales are doing pretty good. They're down a little bit, but nothing out of the ordinary. But the 905s are the ones that took a big hit. I mean, the number of sales have dropped across the board. I mean, look, the semi-detaches and townhomes, number of sales are down 31.5% and 26.2% respectively. That's a big drop. Average price of a semi-detached in the 905 is down almost 10%. And the average price of a townhouse in the 905s is down almost 7%. Those are some big numbers. But 905 is a huge area, right? Like I said, anything outside of the City of Toronto. So we got to break that down even further. So I want to talk about my home turf, Durham region. And when I say Durham region, I'm talking about Pickering, Ajax, Whitby, Oshawa, and Clarington. And when it comes to prices, I'm referring to the freehold median prices here in the Durham region because unlike Toronto, 90% of the sales that happen in the Durham region come from the freehold segment. So we have a lot less condos, a lot more freehold properties. So the freehold properties is a much better reflection of the overall market here in the Durham region than the condos, simply because that's what makes up the majority of the sales. So with that said, let's go over the median prices for Pickering, Ajax, Whitby, Oshawa, and Clarington. So starting with Pickering, for the month of May, a freehold property in Pickering costs you $1,051,000. And compare that to April, that number is practically the same. April was $1,060,000. It's about a $9,000 drop. And moving on to Ajax, the median price of a freehold property in Ajax was $990,000. Compare that to $985,000 in April, pretty much the same. Same thing in Whitby, $980,000 to $988,000, roughly the same. Oshawa, median price was $814,000 in May. Compare that to April, $820,000. In Clarington, at median prices were $865,000 in May. In April, that was $850,000. But if you compare these numbers to December, average and median prices are up in Durham region. We're up anywhere from $70,000 to $80,000. But on a month-over-month basis, if you look at March, April, and May numbers, the numbers have been pretty much stagnant. But there's an interesting observation here. You see the majority of the Durham region are under 2.5 months of inventory. So on paper, that indicates we are and we should be in a very strong seller's market. But I'm sure you're hearing that some homes are not selling, it's sitting on the market, it's missing offers and offer dates. So what's really going on in Durham? So what I'm seeing, being on the front lines, showing properties to my clients, and also from the feedback I've been getting on my listings, the showings on properties over $1 million, activity is fairly slow, especially when you creep up to that 1.2 and 1.2 plus. That's the 4-bedroom detached double car garage. Those homes, depending on where they are, unless they're very unique and very nicely done up, those homes aren't moving nearly as quick as they used to. But the entry-level properties, right, the townhomes, semis, or smaller detached homes listed below $750,000 or $699,000, those homes are selling quick. They're selling with multiple offers, and oftentimes they're selling over the asking price. Because you got to keep in mind, the entry-level home in Durham is different than that of Toronto. You see, in Toronto, an entry-level home may be a 1+ den or maybe a 2-bedroom, whereas in Durham, an entry-level home might be a semi-detached in Oshawa that was built in the 1960s. So with all this information, what do I think is going to happen to the market? Well, you see, if we see another rate cut in July, and more importantly, if we see fixed rates come down from where they're at today, I think we can expect the market to pick up and we can expect to have a pretty strong second half of the year. But also, the new listings have to slow down, or the existing listings on the market either has to get absorbed or just get taken off the market. Because if new listings continue to hit the market and the new listings continue to accumulate on the market, but buyers don't buy them even after a 0.25% rate cut, then the prices have nowhere to go but down.